Foreign investors pulled 32,967 crores out of the market in May. That brings the relentless 2026 sell-off to 2,24,932 crores, crossing a massive 2,67,859 crores by June 5th. In today's video, we are analyzing May's FPI activity, mapping out exactly which sectors they dumped, where they parked their cash, and what it means for the market going forward. Before going ahead, our analytics show more than 90% of our regular viewers aren't subscribed. Hit that button now to subscribe and support Market Insights by Prakash. Now, let us break it down sector by sector. 1. Financial services. Squeezed by surging US yields and a plunging rupee, foreign investors are treating heavily owned Indian financials as their fastest, most liquid cash exit. The 2026 damage has already topped a massive 1.14 lakh crore, but the selling panic is finally slowing down, dropping from 60,000 crores pulled out in March to just 23,000 crores in May. 2. Oil, gas and consumable fuels. FPIs are dumping oil and gas equities at a brutal accelerating pace. Total outflows hit a massive 15,369 crores for current year 2026. The clear trigger, surging crude oil prices fueled by the ongoing West Asia crisis. Third, FMCG. Foreign money is aggressively fleeing the FMCG sector, with total offloading for CY 2026 hitting a heavy 21,633 crores. Fourth, while FIIs are heavily dumping other sectors, their exit from the auto space is hitting the brakes. The selling pressure has rapidly cooled off over the last 3 months. Total outflow by FIIs for CY 2026 reaches 20,517 crores. Fifth, consumer services. Consumer services is specifically impacted as surging crude oil and inflation threaten discretionary spending, prompting profit booking at India's premium valuations. Sixth, the persistent 26,781 crore FII outflow from the Indian IT sector in CY 2026 is driven by 5 factors: generative AI disruption, capital rotation, US trade and visa headwinds, macroeconomic pressures, and valuation correction. 7. Construction materials. This sector saw selling by FPIs of rupees 1641 crores in May, against 1271 crores in April and 3144 crores in March. Total outflow by FIIs for CY 2026 reaches 6592 crores. 8. Consumer durables saw selling to the tune of 1449 crores, versus buying of 80 crores in April and selling of 2902 crores in March. Total outflow by FIIs for CY 2026 reaches 6077 crores. 9. Construction sector saw selling of 1211 crores. Total outflow by FIIs for CY 2026 reaches 6484 crores. On the flip side, there were only 3 sectors where FPIs emerged as net buyers. 1. Metals and mining. Metals and mining saw a whopping buy of 6,697 crores against 3,165 crores sold in March and 1,218 crores bought in April. This is attributed to appreciating Chinese yuan, depreciating INR, and US tariff on Chinese metals. 2. Capital goods. Driven by 12.2 lakh crore government capex push and robust demand in energy, defense, and railways, India's capital goods sector secured 25,182 crores in FII inflows for CY 2026. Foreign investors view the sector as a resilient, long-term structural bet on India's industrial transformation that offers strong pricing power and clear earning visibility despite global market volatility. Third, driven by India's skyrocketing peak electricity demand, which hit a record 270 gigawatt, and a massive structural shift towards renewable energy, grid modernization, and battery storage, power sector is the third sector that has shown positive inflow for CY 2026, with overall inflow of 7285 crores, while it saw a small profit booking of 681 crores in May. FIIs bought 8,557 crores in April. 4. Driven by a broad global risk of flight from premium Indian valuations, with FIIs liquidating healthcare to chase high US Treasury yields, May buying of 183 crores signals selective value hunting and a defensive rotation. The sharp early year correction made domestic pharma valuations attractive for investors seeking stable, inflation-insulated earnings. Previously, we had analyzed April's FPI sell-off, the catalyst that could bring them back, and how domestic investors are shielding our markets. For better clarity and understanding, I highly recommend watching those videos. The links are attached in the description below. For more data-driven educational content like this, please like, share, and subscribe to Market Insights by Prakash. I am Prakash Choudhary, a NISM-certified research analyst. Thank you.